Hey traders, this is Ron Haight. Happy Tuesday. Hope you guys are having a fantastic day. As always, everything in this presentation is for educational purposes only. Here's a daily chart using the S&P 500 ETF, the Spiders. Brokerage account is Thinkorswim. Again, daily chart, red line is 20-day EMA, orange is 50-day SMA, which is an institutional moving average. It's a big one. So today we were up on the SPY, the broad market index, about 1.92%, almost $6. We're into the gap. Now, they say gaps usually fill. If enough time passes, I suppose they do. But the target right now would be the close, which right here would have been 319 pretty much on the button. We are at what was that close? Yeah, close was 319. We closed at 313. We're still $6. So it would take another day like today for us to fill that gap. If that happens and we stop, we roll over, this could still be a topping pattern. But what would completely void this island reversal pattern would be a close to new all-time highs. That would put the last nail in the coffin, and then I guess up we go again. If I look at the Dow via the diamonds, again, it's lagging the S&P. It's nowhere near its previous highs. The Dow is up today a little better, 2%, 2.12%, decent volume. Its close was 270.46. We closed at 263. So we're still more than just today away from getting up there and filling that gap. Same thing applies. New all-time highs will completely void this pattern and give the bulls the edge. Right now on the daily chart, because we're above the 20-day, yeah, it's short-term, bullish. I would just advise some caution. There's no reason, in my opinion, to be long, quote, or short, like betting every single day. Sometimes it takes a little bit of time for the market to sort itself out and show you which way it wants to go. Right now, I would say a lot of caution. Back below the red, I would come down here to the orange. All right, how about the Qs? They were up 1.72%. Their all-time highs up there at 247.82. We're at 242. We are a whopping, $5 away, almost a day like today and a little bit more. The gap here hasn't filled yet. The low, 24451. The high, 24439. Talking about 12 cents from filling our gap already on the Qs. They remain the strongest. Now, the VIX here is interesting. Even when the market was up quite a bit today, the VIX was almost flat, and at one point it was up. It was very strange. The VIX printed a high wave doji, but it is still sort of on its 50-day, above its 20-day. This is a breakout and a back test. This is mirroring the way the S&P is rallying back up to fill that gap. I would still advise caution here. The VIX is not really telling us or giving us a heads up one way or the other. It's just confirming that we're bouncing. The VIX is not collapsing. It's still at 30, it closed at 33.67. So how's Apple doing? So goes Apple, so goes the market. Apple almost at all-time highs. This thing is super duper strong. Definitely, I would consider putting alerts at the 20-day EMA, and if it closes below that red line, that would be a sign there is trouble brewing. Here's Oracle. Now, they had earnings after the bell. Let's come up here and see 54. They were in the 52s as I started the video before I went live on the video. Right now, it's about 5:22 p.m. Eastern Tuesday night, so we regained into the 53s. We're down about $1.20. That's not much. You're basically negating what today's gain was. So with the stock at 53.30, that puts us basically right where the red line is. There's no real move here. Now, what's interesting about Oracle, look at all these lows, 51, 51, 51, and then here you're basically 51. I would put an alert. Anything below 51 on a closing basis, especially if volume picks up, the target would be all the way back down here towards these lows. I mean, this is a clean drop if it wants to start crashing. All right, couple requests here. Here is NKLA. Nikola. This stock is nuts. Back in April, the end of April, it was around 10. Then it goes to 90. Now you're at 60. I just had a question from a technical perspective. What I would say here is there's a bit of a pennant. I could even come off. I mean, really, I guess it's here. So watch this. Let's add a drawing. We're going to put a trend line in, and you can see that, and I could draw one from here to here. And we need to see which way it's going to break out. It's not overly helpful. I would say this, though, it's still bullish. You're above the 20-day EMA. If we wanted, we could add something like an 8-day EMA. Okay, so I've added an 8-day EMA here in blue. Sometimes when a stock gets so far away from its 20-day EMA, something like an 8-day gives us a little shorter time frame. You could use a 5-day too. Here, once we started breaking out, it did sort of get near that area. It got near it again, Friday? again, I'm sorry, Monday, again today, Tuesday, but it looks like we might have closed below it. Because this is such a massive move, I don't even know that a short-term moving average would actually be that effective in trying to help us figure out maybe what a trailing stop could be. But it's also better than nothing. So maybe instead of the 8-day, what if we made it a 10-day? Is that going to give it a little more room? And of course, the answer is going to be yes, it would. It's going to pull it away from the price a bit more because now there's 10 days of data in it. But you can start playing around with an 8, a 9, a 10, 11, a 12. And if one works particularly better than another, that's great and that's awesome. The 8 isn't maybe the 10, but below the 10, you get to here, and then you get the gap fill, and then you get down here to the 50. Unfortunately, when you have stocks that have these kinds of moves, the down moves, I mean, just look at this, from 80 to 65, that's $15. It's huge. It's over 15% move. You could be thinking that's a theoretical stop, but before you know it, you could be here, here, or here just in one day. So right now, I would say it's consolidating, but it's still bullish on the daily chart. All right, now let's take a look at DPZ, which is Domino's. Had a question on some pizza stocks. Here's Domino's, the 50-day, ever since it got back above at the middle of March, any touches or anything near it, it's gotten above. You can see the red line, it's not working at all. So I would watch the 50-day here on DPZ. If we go to Papa John's, same thing, watch the 50-day, the red line, the 20 days not working all that well. It is moving sideways. It's almost creating a bit of a pennant here. We can draw a trend line from here to here to here, and then from here, here, and here. We're getting some consolidation. Below the orange would be, bearish on the daily chart. And here is Bed Bath & Beyond. Now, this thing went from 16, then we dropped down in February to 11, then down here at 3. Now we're sitting almost 3 times higher. What's interesting here is a bit of a fake out, and now we're getting a jump back up. If it clears that high, I shouldn't say the high, but the close, the close from, was that 986? We get above there. Let's see, yeah, 986, a close above there. Then you start talking about maybe 12 something back up to 14 something. So that looks really interesting from a potential long perspective. Trade idea, of course. So that is it. Wish you guys all the best. I'll be back with you Thursday night if there's no huge moves. Otherwise, it'll be the weekend video. So take good care. I'll see you next time.